Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Wednesday, May 15th, about 6 a.m. Central Time. Overnight, the precious metals are continuing to break out after yesterday's rally. This was impressive given the strength in the headline PPI number, where futures came under immediate pressure but were able to shrug it off and focus on Federal Reserve Jerome Powell's speech. He still believes that inflation could come down gradually. So we saw the dollar index continue, which has been in a strong bull market, continue to slump and stall. The 2-year treasury yields were continuing to slide lower, and the squeeze was back in the meme stops, with AMC and GameStop being halted multiple times. The only question that traders are asking themselves right now, will this spillover go into a cryptocurrency like Bitcoin, or will it shift to something like a metal like silver? Only time will tell. Now, today's focus is going to shift back to the PPI, or I'm sorry, the CPI data. Get that PPI data on out of here. CPI data at 7:30, along with retail sales. Traders are already geared up, and it's one of the most important data releases of the year. And this comes out when global equities are near all-time highs again. The expectations for CPI are 0.3%. So we're going to have to wait and see what happens. Now, sticking with that squeeze meme, we've got copper futures up 10%. So that really is the first metal. It's an industrial metal that's up over 10% in a week. The anticipation mounts on whether or not it's going to spill over into its sister metal, silver. Now, yesterday we did attack, and I recommended to many of our clients out here a call spread with 71 days to expiration. It costs $1,000 and could potentially pay out 20 times the amount that you paid for it. This is a particular option strategy that also our award-winning metals program holds inside of its portfolio of different assets and different futures. Now, looking at some other things here today, if you want information on that particular option spread, reach out to me directly or call our trade desk here, 312-858-7303. Now, shifting focus to the S&P 500, after that PPI release, futures had quickly traded down to our key level support right around that 52.10 before shooting back higher and getting near our resistance point 52.65 to 75. That's where we're hanging out right now coming into this CPI release. We'll see here if futures can maintain this key level support. Most likely the next upside target is going to be a round number like 5,300 and beyond that 5,330. Any break below that critical support 52.10 could lead to a bigger washout down to the 51 or 50-day moving average at 51.86. Crude oil futures are stuck in about a $3 range with 77 on the downside, $80 on the upside. It's going to take a breakthrough either one of those levels to really determine what the next trading range is going to be or next key level and direction. Now, getting back into gold and silver, the key level to watch on gold, 23.85. Go back about 3-4 charting days back to that Friday high. It sits right around there. You're going to want to see the futures break above this. It puts $2,400 in the cards, and then above that's going to be the all-time high. Now remember that old resistance, 23.50, now new support. We don't want to see futures trade below that. We break below 23.50, we go back into the consolidation range. 2,300 to 22.93 are the line in the sand. You don't want to see a break below that. It's the 50-day moving average, and it's also a number of key levels of support we came off of. So looking at these markets here, it's going to be explosive. Many of you were working orders in the overnight session to take positions off on a rally where it was getting close to testing that 23.85 level on the gold market. Congratulations to you. You're wisely taking off some risk ahead of an event that could really send this market in a frenzy. So got any questions? Give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.